Hello and welcome to another episode of Nothing Ventured with me, Aarish. Today in the studio with me, I'm super excited to have Ben Prade. Ben is a partner at Bullhound Capital based in London. He's been on Bullhound's investment team since 2018 and became partner in 2021. He joined the firm about 10 years ago to build its asset management side within GP Bullhound, a group that has operated for 25 years and runs a network of 12 offices and a large events program, including Tech All-Stars and the Northern Tech Awards. Bullhound manages around $1.5 billion of assets under management and invests in frontier technologies, including AI, quantum, and robotics, and is an investor in quantum systems. In today's episode, we talk about how we had a pricing system with SaaS, but that model doesn't work with AI.
The flip side to that is this SaaS-pocalypse, the concept that software is dead.
How we need to figure out how to solve tokenomics.
Tokenomics. This is the biggest thing that everyone is going to need to solve.
How specialization is becoming more and more key in venture.
You'll get winners
who
get very, very rich, and then you get lots of people who get subjugated.
And why fundraising is a storytelling process.
Fundraising is a storytelling process.
How the government is backing quantum, and is the UK finally picking its lane.
And the government, they believe that OQC can be the quantum champion of the UK.
And where the money for growth is coming in quickly enough.
There isn't a linear revenue growth curve that you can rely on.
And how we can only manage our inner monkey if we understand it first.
Managing the monkey and being a human is the biggest dilemma that we all face in our lives.
Let's get straight into it. Ben, really great to have you in the studio with me today. Thank you so much for making the schlep up from Kent. I know the M25 is problematic at the best of times, and I think you found that out for yourself again today as well.
Yeah, of course.
Yeah. But look, I mean, we've got a lot to get through actually today because I think there's some really interesting topics that we want to talk about, right? So the first one, and you know, this is partly kind of, I guess, my curiosity as a CFO, but how are business models going to work, right? How are we going to price them? We go from no revenue, then all revenue, right? So investors and founders often default to kind of SaaS multiples, but you point to kind of usage-based pricing at providers like Anthropic, right? Which clearly token utilization usage is how these companies are generating revenue. So where does that usage-based pricing break down, and what kind of concrete misallocations arise when investors force an AI company into SaaS valuation frameworks? And maybe to put this in a bit of context as well, we had Mukund Jha, the founder of Emergent. You know, they just raised 60 million from Cosl and SoftBank at, I think, a 300 odd valuation. When I asked him point blank, right, do you think the valuation is accurate? You know, in his, and of course he's a founder, right? His response was, I think no one really knows how to price this, and I think we're massively undervalued at the moment compared to the reality of what is possible. So yeah, I would love to get your kind of thoughts.
I mean, yeah, that's a massitive question, right? Pricing is huge right now. I think we had a system in the SaaS world, which was relatively easy. 2018, 2019, the multiples changed a little bit, got a little bit excessive, went from 4 times revenue to 10 or 20 or 30 times revenue.
Yeah. Oh, well, we saw 50, 60, even 100 times at one point.
Yeah, it's crazy. I think in deeper technologies, you're right, that the problem is there isn't a linear revenue growth curve that you can rely on. So then I think in some ways the pricing becomes a little bit more old-fashioned, a little bit more of a bartering system, right? Because you've got a founder who obviously wants the highest valuation possible and an investor that wants the lowest. I think a lot of it is coming down to thinking about potential markets, right? What we have found with some of the best companies in the world is they created their market. So another route you used to go down was TAM, what's the addressable market?
Yeah. But then you have the Spotify and the Uber kind of examples.
Exactly.
Or the Airbnbs.
Created their own markets that we didn't even know were there. So that even that in itself doesn't really work. So I think really as an investor at the growth stage as we are, we're trying to think about, okay, realistically, if we come in, lead this round, price it at this, how do we make a bit of money off it in the shorter term, 2 to 3 years in, when they do their next round? Is there enough of a story here to say that they can do a next round at a higher valuation? Because the problem with getting a very high valuation early on, of course, is that you can snooker yourself, right? Because then you may have to do a down round, and everyone hates that. So I think there is a bit of bartering going on with founders in terms of, look, you want a steady growth of your valuation to the point where your revenue really starts to kick in, because if your revenue does kick in and your valuations have gone out of line and you start to define your revenue potential later on, again, you're going to have to start doing down rounds, because if everyone starts pricing you using the old models, you've got a problem. I think the wider point that you're talking about here is, and Jensen Huang was talking about it this week, right, which is tokenomics.
Yep.
This is the biggest thing that everyone is going to need to solve, right? So at the moment, while we're all experimenting with AI, everyone's happy to pay over the odds.
Yep.
And the AI companies are perhaps happy to give it to you under the odds in terms of what its value is, just to get you onto their platform. So we're all playing around to see what the value is. No one's really sure, right? If I spend 5 minutes on ChatGPT to do a banal task at home, which I could have worked out for myself, or if I spend it, doing a thesis on something that's really important, the AI doesn't realize the quality of the output on either one of those things.
But you're still spending tokens on inference.
But you're still spending. Yeah. So trying to understand the value of those tokens, and also importantly, trying to understand the cost of those tokens. And I think that's what Jensen was starting to talk about this week, is there's going to be a rationalization on the compute stack. I mean, how do you produce those tokens? And then what are they worth then? Because every one of those tokens is revenue for a company, because they can take that token and make money. So how do you price your bit, and how much have you put into that? The question is, we don't really know. What's really interesting to me is what happens once we get to such an advanced market. Like stock markets are so precise, the perfect market theory is that every price is perfect at all times and taking in all information. Well, eventually we must get to that point with tokens, right? So then are there other ways of creating markets around that? Is there a secondary market for tokens? Do you buy tokens ahead of time? Do you then start, if you use a token to make a piece of work, is there a secondary market for the piece of work? Rather than everybody using tokens to make the same pieces of work.
I'm smiling because there's a couple of examples. Like we know of companies that have set up, I mean, these are, large corporations set up trading desks, right, for tokens, because, if you're in a project team and you run out of your tokens, then what do you do, right? So they're bartering them there. One of our guests whose episode came out today as we're recording, Miriam Aarish, founder of Doubleword, she's been focused on inference since 2022, and their business essentially allows you to buy cheaper tokens from open source models, right, as opposed to the closed source Anthropic, Claude, etc. There is that question of, okay, as models also improve, how does the cost of tokens move with that? So, for example, like a lot of people I know at the moment are running the latest model of Claude, and are just burning through tokens like crazy, right? So that there is that kind of inflection point where people will either rationalize their use. So Uber Uber essentially had used their entire annual token budget in 4 months or 5 months or whatever it was.
Really?
And there's recently someone said someone had posted a company that had spent $500 million on tokens in 1 month, right? So people are still figuring this out. Like even at the consumption level, as businesses, we're still not seeing the full impact of how these and of course, as prices potentially rise, as as GPU and compute becomes more expensive or potentially even less expensive, how does that all play in?
Well, right now we are actively almost forcing our employees to use tokens to get comfortable with AI. There's an arms race out there because you want your people using AI. So it's a strange situation where you're forcing people to spend money
to make them redundant down the track, I guess.
Well, perhaps, yeah. But in other parts of the business, of course, we don't want them to spend money. If you take a flight to Europe, don't go business class, go economy, Sure. But here, spend as much money as you want. That's not going to last. It's a strange situation at the moment. So, but what's really interesting to me is you have a secondary market for tokens, but there's going to be a secondary market for work produced because so many people need the same pieces of work. So if you think about banks, say in the morning a big company comes out with a new share offering or a new convertible bond, everyone needs to calculate the ins and outs of that particular bond, go through the prospectus, understand exactly what that is. There's no point 100
Every single
banks
bank
doing the same piece of analysis.
Yeah.
If one bank does it, I'm sure there'll be a secondary market where instantly you can list your piece of work, almost like an Amazon of pieces of work. And these pieces of work will be valuable for 20 minutes, maybe 10 minutes.
Yeah.
And if people will come in and pay it, and then instantly it's gone because the world will move so quickly.
Yeah.
And that's really interesting for me. What are these knock-on markets? What are these knock-on opportunities way down the line? Who's going to spot those?
I've seen people building for the agentic economy, right? So agents buying other agent skill sets, for example, trading, trading their output or whatever it is. Like there are, to your earlier point, right? There are markets that we have not yet conceived.
Exactly.
Because you fundamentally are coming up against a technology that is, advancing at such rapid pace that everyone's now comfortable with it can answer a question. People are now comfortable with, it can maybe do a bit of stuff in a spreadsheet, can create a deck, can do this. These are all human level tasks.
Yeah.
And yes, up until now, humans have been doing them. Okay, fine, that gets automated away. But surely that's just scratching the surface, right? Like that's the point. Those are the most banal tasks. What are the higher order and high level thinking kind of operations that these agents potentially, or all these language these foundational labs are going to be able to do? And we've seen that kind of rapid development even internally with them, right? Like every time they, Claude Cowork or Claude Code or OpenAI's equivalents, those kept stacking and just adding more and more value. So it went from hey, this is a cool kind of chatbot to play with, to like, actually, these are tools that are quite existential now almost.
Yeah, they are. But I mean, we do have to go back to what we were talking about earlier is just language.
Yeah.
It's all words based.
For now, yeah.
Yeah. So the physical AI world is just that next dimension, isn't it? When we can really start to understand human movement and all sorts of elements of human activity in the real world. I mean, I still think we're quite a way off from that. So within the language model world, we are still limited by the parameters of language, ultimately, and numbers and things you can write down. And ultimately, the biggest source of information is still the internet, really.
Yeah.
But we'll see what this next generation, I mean, you talk about markets. I mean, I can't even fathom what type of markets will be derived from physical AI.
I mean, it also changes the nature of the financial markets, right? Because you could, you've got hedge funds doing microtransactions and micro trades, in milliseconds, nanoseconds, whatever. When you have agents running through all of this, like those markets start becoming actually more perfect. We actually start approaching the kind of Adam Smith, perfect information, perfect markets. Whereas at the moment, obviously, the arbitrage is that it isn't perfect, and not everyone has the same information. So yeah, I think there are lots and lots of second and third order consequences of this stuff, which we haven't thought of, aren't thinking about, but cannot even fathom. I think the robotics and the physical AI stuff is super interesting. Like I was at an event last year, I think now, but there was a guy, he was a family office CFO, and he was wandering around the room asking people kind of the same question. And his question was, when do you think there will be a robotic football team that can beat a human football team? And I was very bullish because I said, I think, on the inside by 2028, 29, on the outside by 2035. And he's like, wow, okay, well, most people are telling me, are thinking 2035 beyond. Again, I think, there is a little bit of this, overestimate the potential of technology in the short term, underestimate in the long term. I mean, seeing some of the stuff that has come out of China, you could imagine, okay, maybe not beating a human football team, but I think they could potentially hold their own, right, at some point in the not so distant future. I think the question with robotics obviously comes, how does that then how does that then change how we build stuff? How does that change, and by build stuff, I mean manufacturing, but equally, how do we build buildings, right? How does that change? How do we stack shelves, right? Who now works in an Amazon warehouse, right? Like all of those sort of things. we've already got driverless cars. I haven't used the Waymo in London yet, but like, it's there. And again, I think humans have a tendency, right? We anthropomorphize everything. We have a tendency to think about these technologies in the way that we think as humans. But presumably there is an opportunity that they start thinking or start, or they will do things that actually humans can't do today and haven't been doing in very different and novel ways.
In the long term, for sure. But I think so often the tools that we use create the output, have a massive input on the output, right? So I would think a lot. There's this song out there at the moment. I want a guy in finance. It's got to be 6 foot.
It's a bit
4,
old, but
yeah, exactly. Or maybe it's not out at the moment anymore.
If it's still going around, it's definitely lasted a while in that case.
But if you're a certain person or a certain thing that fits the easy target criteria, there is an issue these days where the value of that thing gets overblown compared to something that doesn't quite fit the criteria at the moment. So the classic example is 2-bedroom flats in London.
Yeah.
Often trade at higher prices than 3-bedroom flats.
They do.
Because the search thing that people put in is, I want a 2-bedroom flat in London. Demand for that one goes too high and the pushes the prices up. And so I think so often the tools that you're using influence the outcome. So if you can find the gaps between, if you have a particular need or desire that sits outside of the norm, you can get that at a discount. So really interesting talking about, again, language models based on words, based on a certain set of data, which is still quite limited at the moment. How can you go about a business that doesn't sit within that frame that everybody else is operating in? Because then you can find value. You can find discount. You can get involved in things, or you can create a business that sits outside.
Again,
of that.
It goes back to your point. You're creating your own market,
exactly,
rather than kind of a Me Too, which is this whole question around AI wrappers and so on, right? Like, I mean, we've seen a lot of that over the last couple of years, but with the pace of development and innovation at these foundational labs, the obvious stuff. There's been a lot of, I'm obviously heavily sort of interested in what's happening in the world of operational finance, right? And, you had a ton of people coming out and building, finance tools that can interrogate your ERP and do this and do that. And then Claude comes out and releases something which in 5 minutes can do, essentially the same thing. So I think it'll be interesting to see what the true edge cases are, which I think is what you're talking about, because I think those will be the really exciting companies. And going back to this question of valuation, I guess my kind of final question to you on that is, there's a lot of talk about, are we in a bubble? There's a lot of talk about, obviously we're about to see Anthropic IPO at about $1 trillion, SpaceX at $1.5 trillion, I think, if not more. OpenAI at similar-ish levels. Do you think we're in a bubble, I guess, or are you? Do you have a longer-term view?
Yeah. So let's unpick that. I think in terms of Anthropic and OpenAI, I would buy them at those levels. Okay. To be honest, I think those companies will define our future because they're so far ahead. They're uncatchable. Mm-hmm. No one, even if they had the talent, could probably raise enough in this time to catch up with them already. So I think they're actually not badly priced.
Interesting.
For the revenue growth, especially Anthropic, which is 10 times in its revenue every year at the moment, and it may even go further. You said about short-term over-expectation, long-term under-expectation of technology. I think that's always a problem. There will be a moment where expectations in the short term run out of whack, and we will have to have some kind of corrections. And then out of that, the long term, we see the really good things come through. I don't think we're there yet, actually, and I think the implications of the technology, we're still way on the upside in terms of understanding what it can do.
And in terms of consumption, right? Like only about 13% of the world has even used OpenAI or a chat or an LLM.
And they're not really using it properly yet.
Yeah.
But I think the flip side to that is this SaaS-pocalypse. Is is the concept that software is dead. I think that's ridiculous.
Interesting.
And the market, as always, flips from one side to the other.
Yeah.
And everyone's decided all these software companies that have been out there for a while are going to slowly die and wither on the branch. And I don't believe that's true. And that is because I still firmly believe that a lot of companies operate at a technology debt.
Yes.
They probably don't even have enough software to do their own business properly now. I think back to my banking days, and we did have some decent pieces of software.
Banks are like notorious for just buying tons and tons and tons of legacy systems, and they're figuring out how to string them, and you can't turn them off because multiple parts of the bank would fail.
And there's only one person that knows how to use it. If it breaks, where is he? Get in here now. And then you'd have these people in banks that sit between these big software systems trying to reconcile and fill the gaps. That's just a human being who, if that person's out on holiday for that week, the whole system used to break down, I still think that most corporate, and banks are more advanced than most industries, let's be honest, in terms, because there's a regulator telling them to do it. I think most industries still are at a technology debt where they're now seeing that AI is coming down the pipe, but they've realized that their existing systems are a mess. Before they can even start using AI, they're going to need to do something with their data, because the biggest problem is where is the data? People keep saying we've got decades of proprietary data. Yeah, but where is it?
Yeah.
Can you even use it?
Are you using it?
Yeah. How do you interpret that? Databricks, companies like that, I think are super, super interesting, that kind of saw this a few years ago, who started to think, let's find a way for you to store your data so you can use it. And at the time it was a bit boring, but now, of course, it's in the new world, their valuation has taken off because it is allowing people to use their data with this new technology. So I think actually what will happen in the kind of short to medium term is people will buy more software because they will realize there's a lot of their processes that are standardized within their particular industry need software that is for that industry.
Sure.
And now,
verticalization is massively
completely
important.
Right now, Anthropic is not building for those little industries that sit around the world. People will buy data, will upscale on existing software that maybe has an AI component to it to make them feel like they're doing something in the AI world and start learning about that. This is a long process, right? I travel around the world. We have investors all around Singapore, Malaysia. There's lots of groups there we work with. They're a long way behind in terms of the type of way we're thinking about software. I don't mean it badly. They're not behind, but they're still very traditional in the way they do a lot of their processes. So, we live in this bubble, right? We are in the tech world. We think it's all cool and we're using it all the time. But as you just said,
but a trading company in Hong Kong is not doing that, or a manufacturing business in Malaysia.
Absolutely not.
100% agree with that. I think there are legacy. They're not legacy businesses, but they are legacy business models, maybe. Where that sort of stuff starts becoming, slow adoption, but once it starts getting adopted, will have, again, transformational impact, right? I have a cousin, he used to run a foam manufacturing business, which he then sold, but his what he's been building for the last couple of years is an AI automated factory planning system for fabrication, right? These are businesses that will never have touched this type of software. The other thing is, on the SaaS-pocalypse, I've been thinking about it as well. I think there are some businesses that don't need to exist. Like, I don't honestly think Monday.com needs to exist. As an example, like it's pretty much a spreadsheet.
Yeah, legal services, accounting services, you look at that and think, wow, that's easily
done.
Oh,
those are, accounting services, gone, right? We sit on top of that at the strategic level, which is harder to replace, but it'll come at some point. But what I think will happen with some of them, like Salesforce, to take as an example,
which had an amazing quarter, right?
Yeah, because they will have an MCP that then works with your AI tools, and they just get naturally integrated. What may change is how we interact with those software tools.
Exactly.
So we won't necessarily have Salesforce as a cloud-based piece of software that we go and look at. we'll just interrogate it directly through the agents or the tools that we're using.
And that's the big question, isn't it? Will agents go back and use the existing software, or will they create their own software within their own world and go away and drop that? That we don't know that, right? And it'll be different for different industries.
100%. I mean, we've got a couple of potential clients that we're talking to who, are just like, CEO wants us to automate finance fully, right? And build agents and have them rip through everything. And I'm like, okay, cool. But you've got a bunch of tools that you're currently using and you may not be using them to their fullest capacity.
Yes.
So fix that first, see where the gaps are. And then, if there's a need for an agentic solution, of course, like I'm not saying don't do that.
Yeah.
But I think what tends to happen is, again, people get really excited about this sort of technology, overcorrect. And then they're like, okay, well, I built my CRM, it works, but actually this functionality doesn't work, or this security is off. And therefore actually maybe Salesforce plus an agent or Salesforce plus whatever tool we're using makes more sense. So,
I think that's the way things will go.
Yeah.
I mean, and for a decent amount of time.
Yeah.
This isn't going to change in a year.
Yeah.
This is like 10 years down the line. People are still going to be doing
well,
this.
the web has not disappeared.
No.
Right? Like, I mean,
exactly.
this is the reality.
Yeah.
So to switch topics a little bit, right? And this is one that I personally love, right? So, and we've sort of talked a little bit about it, at least tangentially. So the importance of storytelling, right? You move from hiring traditional analysts to hiring PhDs, right? And very, very heavily domain or experts within certain domains to help raise money and also to tell a technical story. At what point does prioritizing a stronger fundraising narrative create signaling risk or hide technical fragility? And which costs should founders and LPs accept to avoid that failure mode?
Interesting. So, well, firstly, just to go back and say, we started hiring PhDs because we realized that there were technologies coming through that were commercializing that we didn't know enough about. And you needed deep academic knowledge to do that. So ultimately, we brought the PhDs in to be investors.
Yeah.
But what we realized was that some of our experiences with deeply academic people was that, that maybe they haven't spent a lot of time, I want to be polite about this, but they haven't spent a lot of time maybe interacting. We talked about, jobs before, with the public or other kind of people in the industry.
Yeah.
And it's all about relationships.
Yeah.
So what we've had great success with is bringing wonderful young PhDs in who, and you've got to make sure that these are people that are hungry for the commercial sector and they don't want to go into a world of proving different
It's not
new things.
academic, it's commercial.
They want to come and do this. And then bringing them in on the fundraising side, as you said, fundraising is a storytelling process.
Always.
One of the most wonderful things I love about humans is that they will ignore any facts and figures in terms and always believe a good story, right? So why would any new fund ever get raised when there are great funds out there?
Yeah.
Just because somebody tells a story and we're always hook, line, and sinker for it. And we can talk about the evolutionary world of, I have wonderful concepts, or you've probably heard these before, that we're all kind of evolved from religious groups because the heretics were kind of wiped out by the religious groups. So it's all in all of us to believe in something. Yeah. If it's a football team now or whether it's religion, doesn't matter, but we have to believe. And we still believe in stories. And that's a wonderful thing about us. So crafting a good story, whether you're a founder or a fund, it doesn't really matter. You have to have people believe that in what you're doing and sell them a dream, right? There's nothing wrong with that. Elon Musk is the best in the world at doing that. He may sit there looking grumpy, but actually he's constantly storytelling about the future.
Yeah, well, Adam at WeWork,
Yes, exactly. Yeah. This is how I see the future. And people are, wow, this is amazing. And I'll give you my money. So when it comes to the PhDs in the business, I think it's more for them to learn about how important storytelling is. Because when you come from a factual world where everything has to be proven, you go into a world of storytelling where absolutely nothing needs to be proven because it's all future-based. That's quite a leap, I think, for them. But of course, these are deeply intelligent people. And in the end, it doesn't matter if they're PhDs or not. I've just found in my career that intelligent people are intelligent people.
Yeah, sure.
They have the ability to do anything. They just need to be trained. They need to get experience. And that's what we found. And of course, our decks are beautiful, right? They can help us create things on a whole nother level that I didn't even think about. And yes, it helps the story in the long run, but they have to go through a process, I think, of understanding that jump from reality to storytelling. And we talked a bit earlier about entrepreneurs again, a certain type of person. When they tell that story, they believe it. Even if it's completely made up in their head while they're, lying in bed one night, everything they say they believe. It's not lying because to them it's true.
Yeah.
And that's a brilliant story, right? The best liars in the world believe their lies, and we can talk about the world of politics or whatever.
Yeah.
So storytelling is so vital in everything we do. And anyone that thinks that storytelling isn't important is a fool.
There's, so Terry Pratchett talks about it as, we are storytelling apes, right? Like that. And, even if you think, I'm listening to a whole bunch of stuff on cognitive science at the moment, right? And there's this whole kind of thing is, was language a precursor to intelligence, or was it a result of?
Yeah,
right?
It goes back to the tools thing that we were talking about. Is it a result of the words that we use? Is our intelligence a result of the words that came about?
Yeah.
Are we trapped by the words that we use?
Yeah. So if we only have a word, if this is a can, then we can only think about it as a can. But if you're it's probably a bad example, right? But if you're an American, it's a soda. It's a can of pop or whatever, right? Whereas for us, it's it's whatever it is. And so therefore people think, or the trope is always, Eskimos have 70 words for snow, right?
And the Russians have no words for emotions. I'm not a Russian expert.
I have not heard that one before.
I think they have less words for emotional states.
I'm going to check that out. But it comes back to again, not to harp on about AI, but again, this is the question, right? Like, because AI has essentially linguistic skills, does that make it intelligent, or is that is that the wrong way to look at it? But I think for me, and it's something I talk about all the time, like, so my kind of catchphrase, if I can call it that, is narrative over numbers, right? Like, which is a weird thing for a CFO to say, but it's not a weird thing for a CFO working with venture-backed businesses to say, because it's never about what has happened. It's always about what can the future bring us. And to your point, right? Like and some of the massive failures and frauds and so on that have happened were to an extent because they got caught out. But actually, had they have been able to persist with their story,
they probably would have got there.
They maybe would have got there,
you look
right?
at Theranos and those types of things.
That's exactly what I'm thinking of, right?
Yeah.
Like Theranos potentially could have got to where it was heading because no business, and certainly no venture-backed business and no startup, starts knowing what the future is going to end up at. Uber did not start off as a ride-sharing marketplace for drivers and passengers, right? It was going to be essentially, for a replacement sort of taxi service, which of course is kind of what it is, but that isn't how it was thought of in the very early days. And so many other technologies and companies would have followed a similar pattern, right? And the obvious pivot and all the rest of it. But I think and I think it's a problem that a lot of technical founders, going to your point about the PhDs, really struggle with, because they want to say, this is what our technology does and how it does it. And if you've ever sat in a pitch session with a technical founder, often, despite the technology being super impressive, really interesting, they can lose the crowd
completely
because they can't speak about what is the narrative future of this business. Like, why is this exciting? And I always say, like, to founders, if you are going after investment, you want to grab the investor by the emotions first.
Yeah.
And if you can prove it, even better, right? But
we try and see through that as an investor, because of course we're on the other end of that.
You don't want to have to believe everything.
The story. Yeah.
Sure.
So you do try and see through that kind of narrative. I think for us at the growth stage, it's a slightly different prospect.
Because you have
stage,
numbers,
of course.
you have traction.
I mean, we do want to be able to speak to customers. We want to be able to see the product. We don't really want to take technology risk. And I think that's the difference between us. Because in the deep tech world, as we talked, you don't have a nice linear revenue to rely upon. Most of these companies have almost no revenue, and you're coming in in a round of 3, 4, 500 million. So you're going to need something to hang your hat on. And so obviously there's IP there. There is perhaps customers who have already worked with them. There may be large corporates that have done projects with them that aren't specifically the product that you're investing in, but can tell you that these people execute. And those things are worth their weight in gold, right?
100%.
So the technology risk we want to avoid. So ideally the technology has been built. But we did a presentation recently, my colleague Callum, who's at PhD, and I were talking to founders and saying, actually, I think early stage deep tech founders have a pitch to growth stage investors. They don't have to only go with early stage funds. Early stage funds are quite small by nature. You're talking tickets of 1 to 3 million. If you're a deep tech company, you're going to need more than 1 to 3 million. You're going to need rounds in the tens of millions. And you're going to need to get that from, at the very least, late stage venture and early growth, of which we take up that scene. So if we can get comfortable with what you've done, even though your revenue is quite low, if we can find other sources to corroborate what you're talking about, then that's something we would look at.
I'm going to have to have a conversation with you after the podcast. In that case, I've got a car to sell you. But
I do think a lot of founders don't realize that they can probably access larger pools of money with having executed certain things within their journey.
Sure. Yep.
We talk about this concept of grant-entrepreneur, which is obviously people that have managed to secure grants and delivered on certain targets within unlocking further money. Again, which is evidence of execution, and this technology works. Those people can go to bigger sources of money. And of course, if they were in the US, no problem, right? They would go to a fund and get 300 million. So why can't they do that in Europe? So that's what we want to do. And then with our technical kind of credibility, other people can come in on our ticket and say, oh, well, we'll back what you're saying because you've got a good record of doing this. Yeah. And let's put together 200-300 million rounds here. It's doable.
The learned wisdom is always, match your stage to your investor, right? Like make sure they are appropriate, et cetera. But in deep tech, exactly to your point, that goes out the window. Because if you are a space tech business, right, to get off the ground, you're going to need a huge amount of capital and you're not going to have any proof points around anything, right? Well, sorry, you can have limited proof points around, certainly around revenue, right, and commerciality. And to your point, right, like early stage investors in the UK, I mean, we're seeing bigger rounds, right? We're seeing seeds at like 9-10 million, which is a definite move away from the kind of software era where seed rounds are like 1 or 2 million, maybe, or a couple of million more. But I think that's a really interesting way of thinking about it if you're a deep tech business, because like especially if it's anything hardware, right, that's an immediate problem. If it's anything kind of complex in terms of compute or AI for that matter, which touches on sort of foundational model type issues, then you may well have to do that. I think you've taught me something that.
Well, I mean, look at yesterday, right? We led the deal in OQC that the Chancellor announced. It was a 300 million round. We led that with 30 million. This is quantum technology.
Yeah, sure.
They do have use cases in data centers now, but the commercial revenue, the commercial ARR is limited there, right? Still, and they are going to need more money in the future. So why would somebody like us come into that? Well, we've seen the technology, we've seen what they're capable of, we've seen the team, we've seen them deliver on various other projects, and the capability in the shorter term is there. What's interesting about having the government as an investor in there as well is that I think they believe that OQC can be the quantum champion of the UK. Yeah. The nice thing for us as an investor is that means there's probably money down the road for OQC. They will need more money to get to where they want to be. And the government is effectively saying, well, we're going to back it now and we'll continue backing it. Yeah. It kind of de-risks it for us as a growth investor, right? Because the problem always is with growth growth deep tech is that you come in and lead a round. But as we said, there's so few funds that will lead rounds. Who's going to lead the next one? So, you can't keep leading it all the way through because no one else is really verifying your thesis at any point by saying, we'll back it too. Yeah. And then you can just end up pouring a load of money into something that goes nowhere. So we need other funds in that process. The government's coming in is really, really helpful for that because that firepower is there. And it's back to almost like the SoftBank model. Do you remember when they came in with these huge funds? And it didn't really matter which company out of a selection they picked. You knew it would be the winner because they could back it with billions and billions and billions. To your point, they will eventually get there.
Yeah.
So you fake it till you make it. And if you've got enough money, you will make it.
Well, we had Alok Sharma, who was the ex-president and CFO at SoftBank International Group on, and this is exactly what he said. Like essentially what was happening was Masayoshi Son was taking very, very early bets on a long-term thesis around what was going to happen. So the big one that he did was obviously Uber, ride sharing rather, I should say, in Southeast Asia. But he also did, a lot of telephony stuff and kind of in the telecom space. And then, WeWork, despite obviously the ultimate result with WeWork, actually it did create an entirely new category of how we think about office and space and so on and so forth. I think you will find some investors that are always very nervous when the government kind of starts playing in early stage investing.
I mean, they've had their disasters in the past. Yeah, look, there will be problems. There will be companies that won't work.
But it only takes one.
But yeah, I mean, I think it's become a geopolitical issue. The world can't fall behind the US on everything because we found that, obviously when it comes to trade tariffs and everything, if you've got no leverage, you just get whacked.
Yeah.
So how can we have some kind of leverage in the future? And if you're going to go down the quantum route, great. It's a really clever political way of having leverage.
Picking a lane.
If we're winning in this, then we'll share our technology if you share yours. And the French have actually been quite good with this. They're very good with nuclear technologies. They have their own language model.
Mistral.
Yeah, they're quite independent.
And they've taken it. So this really works well with kind of my next question. There's a couple of points that I think I'd add on to that, right? So yes, you have Mistral in France, but they also, the government just gave a tender to 4 local cloud companies rather than US cloud companies, right? China has basically blocked US technology, for decades, and therefore has innovated its own technology. And, arguably WeChat, Weixin is like far advanced to kind of the apps that we have in the ecosystem. And I've been saying for a while now, right? Like the UK absolutely, I think, needs to figure out, like, I think we're really great at out of the lab, research-led, deep tech kind of problems.
Completely, yeah. So
as a venture ecosystem, we should lean into what we're good at. Now, if the government is leaning into that as well, even better, right? Because then it's essentially soft signaling its strategy, right? Like it didn't happen with ARM, but okay, if it's happening with quantum, then brilliant, right? Because I think the wrong answer to that question is, we should build a foundational lab, because we'd be, to your earlier point, we'd be way too far behind.
We can't compete on that one. Yeah. But, I think it's a difficult one for governments because they kind of it's damned if you do and damned if you don't.
You look at the Future Fund, the amount of negative press that came out.
I know.
Well,
I think it's ridiculous. I think it's fantastic what the British Business Bank has done.
Yeah.
They have massively accelerated the way they operate in the last just 2 to 3 years, right? They're really dynamic and they're thinking about things strategically. Who are the big funds to back? Who are the funds that kind of fill the gaps that need to be filled? And can we do more than just, a few million? Can we put something big in here? So I think I've nothing but praise for the British Business Bank and what the government's trying to do. And I hope it works out really well. And we're seeing it across Europe as well. We're seeing similar things in Spain. We've done some big deals with the Spanish government also.
Yeah. So talking about that, right? So to this point around sovereignty, and especially around these kind of capital intensive companies, right? So Europe really does need more specialist funds. And you said managers have to kind of go around the world to raise from LPs, right? So which side do you choose when they conflict, right? Do you accept government or sovereign LPs that narrow investable sectors to build sovereign stacks? Or do you prioritize unrestricted kind of private capital that could force you to forego sovereignty? And kind of what is the choice there, right? And, there are funds obviously that are raising large amounts from Middle Eastern sovereign wealth funds, from Southeast Asian sovereign wealth funds, and then you have you have limited kind of European sovereign wealth funds available for access. So so how do you think about that?
I mean, it's a really, really interesting question. It's something that people don't talk about a lot. It's the tail wagging the dog syndrome. It used to be fine when everything was SaaS or social media or e-commerce because there was no problems. But suddenly you're in a world of deep technologies where
defense
deep technology de facto means dual use, which means that a lot of deep technology companies are selling towards governments. And the biggest budgets, the biggest wallets that are being played with and opened up are defense budgets. So a lot of, in the US, even it's the same there, a lot of the government money comes through that DARPA route, which is all defense related. And so companies naturally steer themselves. I talked about Q Control, which is an alternative for GPS. I mean, their original thought process was, commercial jets, because all those commercial jets fly through that route around the Black Sea, where the Russians regularly block or spoof GPS. But then, of course, you start to see, well, the real money coming into this sector, of course, is from the defense side of things, where they have an even bigger problem if GPS is getting blocked. So companies start to naturally go that way. They're not a defense company, but they end up selling into that space. Well, then if you have LPs that are from across the world and you have companies that are now selling into governments, the defense part of governments, you're starting to have a problem, right?
Yeah.
Because LPs come with a whole set of provisions and parameters around what you can do with their money, which is more than understandable. It's their money. And the problem is if you're selling into defense, well, which side are you on?
Yeah.
And this is where the problems come. So I think for US funds, they tend to raise most of their money in the US.
Yeah, so it's less of an issue.
It means they can do whatever they want.
I had a VC, like he's raising his first fund, very much deep tech defense type investor. He is American. He is, probably, well, not probably, he is more on the Democrat kind of side of the equation. But he has had European LPs tell him he's too American for them to invest in.
Really?
Which is, which kind of goes to your point.
Yeah. Well, I think European LPs definitely want to have an impact or say in what happens. I mean, obviously, the European Investment Fund sits at the heart of the whole ecosystem here. And the way their definitions of what constitutes good and bad has a huge impact on what gets funded across the whole of Europe. So for a long time, defense was like pornography or gambling, right? You cannot touch that. That's bad news. Yeah. And then, of course, you have a war suddenly pop up in the East, and all these definitions start to change in terms of. But that's fine for the EIF. But then, what if you talked about Southeast Asia? We have investors from the Middle East and Southeast Asia. How are they feeling about these types of things? It is a difficult thing. It's a more troubled approach for European funds because you do have to go wider afield to find your money. We're a growth fund. This next fund will be 500 million, and we're very lucky. The last fund is in the top 5% funds in the world. So we're raising money, but we do have to go further afield. But that means we do have to run into what do those investors think about some of the companies we may be looking at. It's a difficult conundrum, right? And you've just got to be transparent. You've got to be open. You've got to have a great relationship with your investors. But this is not a problem that US funds have.
Yeah.
So again, it's making our life more difficult than the US funds. I think great technology funds should be generalist.
Yeah.
They should be able to say, well, this is the new sector. When we raised this fund 2 years ago, we didn't even realize that this was going to be the new thing. They should be able to go that way. The problem is that if you want to raise a fund today in Europe and you say you're a generalist tech investor,
it's really hard.
It's really hard. But if you say you're a quantum fund, everyone's like, well, I've got a quantum bucket. I'll give you my money. And that goes back to storytelling again. Yeah, we're going to do the most amazing things in quantum. And people put money into that. And of course, the LPs have taken risk there because they're very narrowly sectioned in one fund that's doing one particular thing. And if that sector doesn't develop, the returns won't be there.
Yeah.
But that's the way it is. So we are a deep tech fund. We will also look at other types of companies, especially if they're profitable, to marry up the risk. Because having a whole fund in deep tech, while it sounds good from a fundraising point of view, You also want
risky.
to reduce the risk for your investors.
Yeah.
So we will bring in profitable companies in there, perhaps fintech or companies in software that have AI elements to it, but we know have a very good market, strong customer base, and will continue to make money. We even have dividend paying stocks in our last fund.
Wow.
Yeah, they're so profitable.
Yeah.
And that's great. That's great for the investors, because when things start to get tricky, having some dividend paying companies in your fund is great.
Yeah, income is always valuable, right? Especially given life cycle of a venture fund, right?
Yeah.
You're typically 7 to 10 years out from realizing any of that capital, and of course, lots of things can change in that 7 to 10 years, right?
Completely.
Not only in terms of the technology, but even in terms of the financial positions, right? So obviously, during the pandemic, there's a massive holdback, and LPs weren't deploying, and actually neither were VCs to an extent, but circumstances change for everyone, and that necessarily means kind of where you direct your attention and your money, right, is equally going to change.
I think most funds will look at 80% of what they do will be on strategy.
Yeah.
And 20% of them will be stuff that they're going to try. And I think LPs tend to generally appreciate that. The problem always is if things go right, they go right, and everyone loves you. If things go wrong, if things go wrong in your main strategy, well, that's all right. That was the risk they wanted to take. If things go wrong in stuff that isn't part of your main strategy,
that's worse.
You're dead.
Yeah.
Because you can't ever go and raise another fund.
Yeah. Because you basically took risk with you took a punt. With their capital.
Completely. And we can't do that, but American funds can.
Yeah.
They just have that general element to it where they're like, we're gods of investing.
Yeah.
Give us your money, and people give them the money, and they go wherever they want with it.
We're going to do whatever it takes.
Yeah.
So again, you've touched on this issue as well a couple of times, and I think it's one that we really grapple with on this podcast all the time, and that's late stage capital in Europe. And not only, how much of it is there, but also who leads, right? And you know that there are only sort of 5 or 6 European funds that will lead later stage deep tech rounds, especially. Should Europe therefore kind of deliberately concentrate power in that tiny cohort of lead investors and accept the smaller kind of exit markets and fewer IPOs, or try to emulate US generalist funds at scale and risk widespread kind of mispricing of complex tech? Because again, we've had this conversation so often, and it ties back into sovereignty. If you have a really great quantum business in the UK, for example, as you've noted a couple of times, but the only place they're going to find later stage capital is the US, and therefore both the capital and the team potentially kind of move there, and they and that wealth recycles out there, we're losing out here. So how, what is your take on all of that? And how do you think
it's another huge topic. I think the DeepMind.
Yeah,
that's
perfect
that's
example.
the example, right? Yeah. But we were talking about this actually recently internally. Why is that a bad outcome? Because they're still based in the UK. They're still hiring people.
Jobs,
that intellectual property is here in the UK. So actually, I think the UK should.
But it could have been I think the argument would probably be, because I think it was a 600 mil. Like if you think about it today, that was cheap.
But they were never going to get it right. I mean, there's a danger that business could have died.
Yeah, true.
So I think in that circumstance, it was the best outcome that they could have had, and the UK could have had. And they're still hiring people here, and people coming out of DeepMind and starting new companies. We saw one just this week. So that's fantastic for the ecosystem. I mean, we're never going to be able to compete with the US. We're never going to be able to compete with the US.
Yeah. So maybe we should accept that.
Yeah.
Okay.
But I also think that on the flip side, good companies will always get funded.
Yeah, sure.
Doesn't matter where they come from. The top 10% always find money, no problem. There's people chasing them with money. I guess the decision point is that next, 50 to 90%. The 50% drop off are the ones that probably should never have had money anyway. But that next category of companies are the ones, if they had enough money, they could possibly become something really big. They're just timing is an issue. And that's where you think, well, are we missing out? Is Europe missing out? Because those companies probably would get funded in the US. I think the money is coming into the system. I think we can talk. I won't get into the subject of pension funds because I'm sure you've had that one a million times. But we're seeing that governments are coming in. We're seeing that funds like ourselves are building up a strong enough track record to attract money from Southeast Asia, from the Middle East, and we are getting money from the US too. So the money is coming. It's not coming fast enough, of course. And of course, if you're a founder in that space, you need everything now. But I do think that the situation is improving. I don't want to be a Europe or a UK basher. It's too easy to say that.
Yeah.
And I think what
let's
we're doing
find the
today
solutions first,
is amazing. We're still seeing incredible companies. We're investors in Revolut, and it's been an amazing company, right?
Yeah.
Embodies everything that's great about the UK. Got a foreign founder coming in with money from across the world, but funded mainly from here originally.
Made a ton of multimillionaires or millionaires out of 5K check investors on.
And we reckon
at
least 100 companies have been started by people that came out of Revolut.
Yeah, we had someone on the pod, and his kind of tagline was, "We need more mafias," right? And obviously he's talking about the PayPal mafia. So we had Spotify,
but we've seen Spotify, exactly,
bit of Revolut, but
Skype was another one that created a lot of people. Yeah. I mean, it's happening, and we have that. We're lucky. I mean, I spent time, as I say, time in Southeast Asia. They just don't have those big companies there
at all,
and especially the Middle East as well. They would love to have a big star company that really gets grown there, and those people can come out of that. So we're very lucky. I think the entrepreneurial spirit of the great British population is fantastic, and we're still creating companies all the time. And yes, it would be great if there was more growth capital, but it is there. I think good companies will get funded, and then if you can't, you do have to go to the US.
Well, I mean, this going to the US point, sadly or not sadly, I mean, to an extent, outside of just the capital, you kind of have to from a market perspective.
Exactly.
Right?
Everyone's going there in the end anyway. It's just a timing thing.
Yeah.
How much of the equity of the company do you give up to do that? If you fund yourself quite late stage, all of the equity is held in Europe. If you go earlier, more of the equity is held by the US, and then you're more likely to be based in the US because your board and your shareholders are US shareholders. So yes, if we can hold out later into the life cycle of a company, they're more likely to keep the headquarters here. But you're right. The only way they're going to be a global player is to crack the US market, is the holy grail for every European company. So they've got to go there at some point anyway.
And it is the strategy of lots of VCs in the UK and Europe. And we've had many of them on this podcast. They like, part of their thesis is, we will invest in you if you are obviously a breakout business that can scale in the US, because they just know that ultimately the capital and the customers are going to be out there. And so again, we have to accept that. But to my earlier point, right, if we have these incredible, heavily research-led kind of deep tech businesses out of the lab, we can get enough into them at the early stages to be on the cap tables, so that when they do need that growth capital, actually we still have real success for those UK European investors as well.
Yeah, I think so.
Yeah.
I think so.
Yeah,
I really do.
Okay. So look, I think we could probably talk a lot more about a couple of these things. I mean, to be honest, sovereignty and late stage capital are like two of my, they're obviously of the moment, but you really do have to think about them, because I think where Europe is today, geopolitically, but also where we're positioned, quite frankly, right, geographically, like, just means that we have touch points with all of this. In the US, there's a whole ocean between what's happening in Europe and in the Middle East versus what's happening near shore to them, albeit they obviously have boots on the ground, and they have active servicemen and women out in these theaters. But I really do think, the big wake up call for the whole of Europe has been, actually, we need to be better at figuring out how to build and maintain our own infrastructure around so many of these issues. Defense is the obvious one, but obviously it's everything from food to supply chains,
to AI itself,
to electricity. This conversation I was having with someone the other day, again, like, we could talk about building foundational models in the UK, but we have the highest cost of energy in certainly in Europe, right? And therefore, how do you build a data center? How do you make it competitive, right? So there are so many other things that that need to be fixed or feed into those decisions that you can't take it as an individual thing. You have to think about it from a systems level.
But we are very vulnerable when you think that during that period through the 80s and 90s where we kind of shed our industrial infrastructure and past and became a service orientated culture. One thing that AI is good at is kind of service.
Replacing service.
Yeah. So advisory services, we talked about legal services, accounting services, which has been really the bread and butter of the city of London and the reason people come here. That is a worry for the UK. Again, looking at France again, that has its own language model, that has its own nuclear facilities. I've been spending a lot of time in the Middle East. I was there a couple of weeks ago again. They have very cheap energy. They have land in abundance. They have government, corporate sector alignment where they can build a data center tomorrow
this
if
is
they
the thing.
want to.
It's the same in China, Southeast Asia, Singapore, China, etc. The thing that just gets me every time, we can't build houses even.
Yeah, this is a worry for me. So we have this entrepreneurial spirit, but we also have this NIMBYism, which is no one wants to make the sacrifices, the hard yards to take ourselves into this new future. That's the bit. Without getting too political about it, I do worry that the establishment is looking in the wrong places. And, people talk about immigration and stuff like that. Whatever your color is, I don't mind, but we should be thinking about regenerating ourselves from a service culture to a technology-based culture. Otherwise, we've got a big, big problem.
I couldn't agree more. I think there are other things that are going to impact that even further, right? So one is, I think next year or even this year, for the first time, our death rate is going to outstrip birth rate. And on top of which we have essentially a declining population because net migration is coming down. And then on top of which we have 1 million 16 to 24-year-olds out of work and struggling to find work, right? Double degreed, undergrad and master degrees, having to work in a coffee shop. And there's nothing wrong with having to work in a coffee shop. But if you then, built up 30 grand worth of debt to put yourself, or 50 grand worth of debt if you've done a couple of degrees to put yourself through university, that's kind of, that social contract is broken. I think the biggest problem is actually, so I always think about it in terms of China or Singapore, Middle East is probably very similar, is they can make a decision for 10 years time and they can see that through for the next 10 years time. Obviously what you sacrifice is an element of, in China, a lot of, but in Singapore, an element of democracy, right? Obviously, Singapore is also a smaller sort of city state. UAE and Middle East in general, again, you have smaller kind of states. But because we have this 4 or 5 year cycle, no one remains, even when they remain in government, every time the 4 or 5 years is up, they have to reinvent what it is they're going to do next. And I think actually my message to the UK population, and I love this country, grew up here, spent my entire, formative years here, despite being a migrant son of migrants. I came here when I was like 6 months old, so I'm not sure how, how migranty I am. But I'm of Indian origin, born in Kenya, lived in Papua New Guinea in Australia. Like I am 5 times British because I've been in, lived in, and been participant of the colonies, right, and the empire. But actually, I think the British public in general needs to understand that there are sacrifices, right, and B, nothing good is going to happen overnight. And I think that's the problem. We've slipped into this sort of thing.
Is who is that? No one's delivering that message.
Yeah.
Nobody's brave enough to say these things, and it's so easy to fall into the lowest common denominator in terms of what makes people emotional.
Yeah, sure.
So there's 2 real issues there. One is who's setting the agenda of what's important, and I don't even know who that is. To be perfectly honest,
it doesn't feel like it is the government at the moment. Yeah, sure.
The other thing, of course, is within government there are parts of what needs to happen for the UK that are so important. Why does it have to be in the government?
Yeah.
So if you're talking about technology regeneration or technology future, take that whole thing out of the government. have a department, an organization that will always be there, depending, a bit like the Bank of England.
Yeah, sure.
That is completely independent.
Yeah.
And it sets monetary policy and
Yeah,
fantastic, works really well. Yeah. Well, let's have a technology department that's completely independent of the government.
Although interestingly, the Ministry for AI is one of the ministries which is actually doing some good work with Kanishka and kind of the Sovereign AI Fund. And
great, then cut it out of the government. So when the Tories get back in, if they get back in, they don't just shelve the whole thing because it was somebody else's idea.
Yeah.
This is so important. It's like interest rates for our future. Because as you've just described, our children simply won't have jobs to come into. And then, we've got all sorts of issues to deal with because of aging population, etc. So it all revolves around technology.
Yeah.
And a technology use, a technology economy. And right now, that's completely being overshadowed by all these political things that get people popular or unpopular. Yeah. And I do think that the current government has given it a good try, but now, of course, they're getting pulled in all sorts of directions and criticised. And again, we get into this thing where no one's really thinking about, as you say, 10 years down the future. They're thinking about 1 or 2 months into the future.
It's like when you start seeing Christmas in September, right? Like, and the shops are starting to put out the Christmas trees and so on and so forth. It's a bit like that with our system in that we're 2-3 years away from an election, but it's already, it was already top of the agenda a year ago, right? Like, who's going to be the next government, which is just absolutely insane. You cannot, I mean, like if I ran a business or advise the businesses we work with in that way, like it wouldn't work, right? You can't be chasing, you can't be thinking about, you need to have sufficient skin in the game for enough time to see things eventuate, because otherwise nothing is ever going to get done. And I think
you have to have patience.
Yeah.
Unfortunately, with technology, the other flip side of technology is it's speeding everything up. Social media means messaging goes around the country instantly. There was a wonderful quote once that the Chinese premier was asked what he thought about the French Revolution. And he said, it's still too early to say. and that's amazing, in one sentence says it all, right? The things we're doing now will reverberate for many, many years. If we don't do anything, we'll just completely sink. Who's brave enough to do that? And, whether you love him or hate him in the US, Mr. Trump is making changes and making things happen. I'm not saying it's good or bad from my side, but at least there's movement.
I had someone on the pod recently. He's a family business in the manufacturing, essentially working with data centers and so on and so forth, but also investing in manufacturing businesses. And he's really bullish on, the resurgence of US manufacturing, but in the right way, in the right places, right? And so the problem again here, and not to turn this into a UK bashing kind of session at all, because it's not meant that way. But we had a car industry, but is that the industry we want to bring back? Maybe it's not. Maybe there is a different industry that we should be focused on, right? And I think this is the point. Ben, this has been an absolutely awesome conversation. I'm so glad you made it up from Kent to join me.
Pleasure to be here.
Couple of questions that we always end the pod on with all our guests. So what is one thing that you have a contrarian conviction about from any area of life, whether that's work, politics, socially, or at home?
I'm not sure how contrarian it is, but we talked a little bit about the kind of anthropology angle of it. I do think that while modern society is moving so moving we as humans can't evolve quickly enough to do that. I got a car here, and my driver Richard is a lovely guy, and he always has a big pile of sweets in the car. And I know if I touch one of those sweets, I'll eat them all, right? But I know there's a reason for that, because for many years, if you found a tree with fruit on it, you would have to eat. You couldn't take it with you. There was no fridges to store it. It was there,
and you didn't know when you were going to find the next one.
Exactly. So you ate as much as you could. These are human responses, and we beat ourselves up for it. I guess managing the monkey and being a human is the biggest dilemma that we all face in our lives. But I think the key is to understand the monkey, is to understand where we came from, is to understand the thousands of years when we were operating in small groups with a hierarchy, and men performing a function and women performing a function, and trying to understand that's where we came from. Obviously, we must evolve, especially in terms of equality with women as well. And I'm firmly, I think that's a really big part of society right now. And it feels like it's going a bit backwards. And that really, really worries me. We need to understand where we came from and why we do certain things. And that allows us to change the way we are today and see the monkey within us and recognize that. So that's something as I've got older, you know, when you're young, you think you know everything. But as you get older, you realize you are just part of this amazing micro organic system that we live in for a short period of time and then disappear.
Yeah.
And understanding our roots, I think, is super, super. And I think about that all the time. I do. So
yeah, I love that. I think, you know, as you said it, you can only manage the monkey. You can only manage the monkey if you understand it. And I think we don't, right? Most of us don't. Most of us kind of traverse life without thinking too deeply about some of these issues, and then kind of get to the end and say, well, hold on a second, what just happened? You know, why did I just spend 70 years working?
Yeah.
To live
the numbers in the bank account.
Exactly. Which who knows whether they'll be worth anything?
Yeah.
Or even if they will exist, right? Given the lack of people to pay into the tax rate. But and I, like you, I think about this sort of stuff a lot because I think it impacts. It doesn't just impact how we live our lives, but it also impacts. You know, we've been talking about technology. Obviously, it impacts how we think about technology, how we use it, whether we use it for good, whether we use it for harm, you know, all of these sort of things.
And how do we equate with what's going to happen?
Yeah.
I mean, we haven't even caught up with the monkeys that we were in the last, you know, I mean, life has moved very quickly in the last 50 years. In the next 5 years?
Yeah.
I mean, our purpose as humans may change, and I'm not sure we're ready for that.
I have a 25 and an 18-year-old.
Yeah.
And I have, for the last 2 years, been saying to them, we do not know, like when you are in your careers, we just do not know what those careers will. You will not know what those careers look like. You need to be adaptable, and really be able to move. You know, we've talked a lot about specialization, but I think there is also going to be a need for generalists who are able to adapt to kind of different situations across different domains. But yeah, I mean, equally, I could be wrong. I'm like, you know, if we get to a place where agentic AI is running every single business and the government can take a huge amount of tax off of that and, you know, UBI to everyone, you know, maybe people become painters and fishermen and, you know, and do the things that they would otherwise be doing.
Nice, but in reality, what will probably happen at every time in human history is you'll get winners who get very, very rich, and then you get lots of people who get subjugated
and get screwed over.
And that's the worry.
Yeah.
And we're not very good at learning from history because we keep
doing keep not learning from history. Yeah,
exactly. So that's a real worry. That's an issue.
I completely agree with you on that. And finally, so we can get to know the real you, what is something that moves you the most emotionally?
Well, I think probably, I mean, I have kids too, 18-year-old and 16-year-old, so we're in a similar dilemma.
Yeah.
We're doing A-levels and GCSEs at the moment, which is horrific.
Fun.
I'm more stressed than they are.
I can imagine, yeah.
So I guess I think emotionally, I like you, I worry about their future. But if there's one thing that gets me, it's movies. You know, I love a great movie, the sense of escapism from the beautiful movies that are out there, you know, films like Interstellar and, you know, Midnight Cowboy and these types of things. If there's one place to disappear to, I know it's a bit banal, a lot of people say it, but, you know, movies is such a wonderful thing. And you know, there's nothing AI will never really, I mean, they will be able to make movies, but they'll never be able to express an emotion the way some of those movie makers do, you know, and make you take whatever state you're in and change it within, you know, you've watched the first 2 minutes of Up. You remember the cartoon Up? When it tells the story of his life with his wife.
Yeah.
I mean, that movie can make you cry within 90 seconds. Yeah. You know, there's no drugs or anything involved in that, right? It can change the way you feel instantly. And, you know, again, it goes back to storytelling.
I was literally going to say you've gone full circle.
It's the humanity in us that I love.
Yeah.
So yeah,
I again love that. I love watching great TV, great movies. And I also love reading, anything that is immersive. And this is what, by the way, this is one of the reasons that I continue to, people keep asking, well, you could just throw some text into Notebook LM and create an AI podcast, and you could have your voice and your avatar and all the rest. I'm like, what would be the fun in that?
Yeah.
Like, the beauty of this is that it is a human conversation that is wide ranging, that is, across many, many topics. But where you actually get to see, to your point, someone's humanity and what are the things that actually drive them, and you can see where you're passionate or concerned or whatever. And movies and, really great writing do equally those things. And, I've actually started using AI less and less and less for anything written because it just,
it's insincere.
Yeah. I'm a linguist by background. And it really makes me cringe. And it makes me cringe when I read stuff. And the concern I have is, up until now, it's been trained on the internet. It's now being trained on its own output. And everything, because to your earlier point, right? Like, if LLMs are predicting the next most likely token, well, if all of a sudden there's AI generated content and tokens, that's what it's going to train on. And then you're just going to slip into that kind of just muddy average of mediocrity.
I mean, how disrespectful to write a note to somebody and have it written by a machine.
Yeah.
Especially if it's important and emotional. I mean, I think it's quite disrespectful. And actually look at some of the stuff already that I sent maybe 2-3 months ago, presentations I put together, and I look at that and it's so obviously AI already. He's got that kind of hue, that light yellow and that light blue. And that's obvious. Why did I do that?
But because it's easy. And I think that the reality is, right, I think as we move further, and I think this is one of the bets that I would definitely be taking, is as we move further into this world, you are going to see more and more in real life interactions and businesses created around those interactions. This is what I tell
my kids as well, is this is the route to go down.
Yeah.
It's events, it's travel, it's human interactions. I mean, that's going to be everything, I think.
Yeah, but let's see where the future takes us. Ben, this has been an absolute pleasure to have you on the podcast.
It's been great being here.
Thank you so much for joining me. For the audience, where can they find you online? Are you on LinkedIn, X? Where can they find you on the internet?
Yeah, LinkedIn is probably, good old LinkedIn, still clinging on all these years later. Or go to our website. My contact details are on there as well, so people are welcome to contact me.
Amazing. Thank you so much for joining me today. It's been an absolute pleasure.
Great. Thank you for having me.